Alright guys, welcome back to Wolfpack Cryptos. As you can hear, I have sound. First of all, this is not financial advice. Consult your financial advisor. I am not your financial advisor. This is more of an educational channel to learn trading and learn about economics and stuff like that. I'm going to cover equities, then for a brief second I'll cover Bitcoin, and I just wanted to make a video and my thoughts on the market because it's not looking good. So a month ago I made that video, right? And I said the top was in for the equities, for the stock market. And it's really starting to look like that. And I think the psychology for Wall Street, all the investors and traders, I think they're getting nervous. Now I said if even the house is taken by the left, the top is probably in for the markets because Trump really can't do anything for the next 2 years or until the next election, which pretty much means whatever's he can't boost confidence by doing things that may or may not help the economy, right? And I'll talk about the tariffs and the tariff war. I'll talk about NAFTA and all that. But this is starting to look like the top is in. I mean, it's not starting. It already looks like it. I said it a month ago on that video. If you go to my YouTube channel and you go to my playlist, you will find that video I made a month ago, and it's really good. It's more detailed, and it explains why the top is more likely in than not. And once the top is in, the only way is down. And once everyone realizes that it's a bear market, it's going to go down quickly. So if you go to playlists, go to specials on my YouTube channel, and you'll see on the right here, there's a bunch of videos in this playlist. If you go to stock market, will it crash? When and why? Trading and economy. It's 37 minutes and 34 seconds. That's a really good video. You guys could watch if you missed it. Alright, so let's talk about the stock market. Well, for one, people are freaking out about the yield curve. Again, there was a Bloomberg article, and people are looking at the short-term 2-year. Well, this is for 2008. Let me take it to current time, and I've showed you guys the yield curve plenty of times. As you can see right here, the 2-year bonds, the debt for the U.S., the interest rate on it spiked above the 10-year, or they're almost the same. And what that means is that the yield curve is inverting, and the beginning of the yield curve is going higher than the end of it, meaning the longer term debt. So when the short term debt interest is higher than the long term debt interest, in the past, like, I don't know, something like 14 recessions. I forgot the statistics, but it's really high. It's like a 70% probability, something like that. You know what? I could Google it real quick. Let's just find out. Yield curve inversion. Recession probability. So here's an article 7 days ago. And I talked about the yield curve inverting. Once it inverts, it signals you don't have much time. Anywhere from like a few months to a possible like year and a half, something like that. Yield curve predicted GDP growth. Probability of recession calculated from the yield curve. So you can see that the yield curve, when it flips and it goes up like this, it predicts the next recession. And it did it in 2008, 2007. It did it in 1990s, early 90s, or 1988. And yeah, the dot-com bubble, it inverted for that as well. So it's a really good indicator. I will post this in the newsroom and the MMGinvest free room as well, so you guys can look at it. Anyways, you can see that it's starting to invert. Now, you can see that the 3-month and anything smaller than the 2-year is not higher than the 2-year, and that doesn't matter. That's the Federal Reserve manipulating the interest rates. And because the Federal Reserve is more than likely going to have one more rate hike, and that's probably it. They're probably not going to be able to raise rates anymore because they're going to pop their own bubble. And I talked about that in my last video. The last few videos ago, I talked about the Federal Reserve capitulating, and they're going to stop raising interest rates, or they're starting to talk dovish, and they're saying that they're data dependent again, and they're going to start tapering off on increasing the interest rates. I mean, it's still, the interest rates are historically at the lowest they have ever been. So what does that tell you? That means that the economy is so weak, they can't even bring interest rates like even near normal. Normal is much higher. Like 6%, 7%, somewhere up there would be more normal. And we can't even get past 3% without blowing up the debt bubble. All right, so looking at the yield curve, it's not looking good. You can see it as here. This is beginning of 2018. We're going through 2018 right now. And we're coming closer towards fall and the summer. And this is fall now, the end of 2018. You can see the long-term yield rise, the short-term yield rise, and boom, it's starting to invert. And, I mean, we're running out of time. All right, so what are some more indicators? All right, well, here's the S&P 500. I drew this triangle over a month ago, a month and a half ago, 2 months ago. And I was expecting the price to create a fractal, a triangle in here, and trade up and down within this range. And we'll see if it breaks out or breaks down. But I was saying that the likelihood of the top is in after the midterm elections, and the top's in, guys. That's what I think. And because the price couldn't even test the top range of the triangle, what it's doing is there's a lot of weakness. There's people selling into this. Smart money is selling into this. And once the bottom drops and we make a new low below 2600 on the S&P 500, it's over. We're in a bear market. Now, if you look at the FANG stocks, a lot of them are already in bear markets. If you look at them individually, and here's the FANG stocks. I mean, they are down massively from the all-time highs. This is the index futures for the FANG stocks on the NYSE. And look at this. This looks bad. This is from the all-time high was in this June 2018. That was the all-time high. And we're already down over 20% on the index. If you look at individual stocks, In the past 3 months, Google's down 11%, Facebook is down 17%, Amazon is down 16%, Apple 22%. It's in a bear market, so Apple is in a bear market. The financials, JP Morgan's down 6, which is not that bad compared to the rest. And Wells Fargo down almost 13%. Yeah, so in smaller cap stocks, smaller companies, they're down even more. Look at Nvidia. It's down 43%, but that's because of Bitcoin, right? So yeah, I mean, people are getting nervous. Investors are getting really nervous. Natural gas, it broke out. It's still up there for this winter, which this would have been an amazing trade. Here's the NASDAQ E-mini Futures 100. This is what I was trading. I bought down here and I sold up here. I took profits and I'm out. And we have a bearish candle here, an inverted hammer, and engulfing. Here's a shooting star, and this is the daily chart on the E-mini 100. So the price is going to go revisit this bottom support. And once this support breaks, it's over, guys. It's a bear market. And the scary thing is investors and traders, they're going to get out of the market quickly. Nobody's liked this bull market for the past 10 years because everyone knows it's inflated by the central bank. Believe me, people aren't that stupid on Wall Street. They're going to get out. And if everyone gets out all at once, there's only one exit, right? It's a small door. It's like everyone trying to get out of a movie theater while it's burning down. And everyone's going to rush to the doors all at once. And when that happens and there's no buyers, the stock market could drop 50% in like one day. And you're going to see, just like that, in a couple weeks, people who are expecting to get raises in 2019 are going to be getting laid off. Here's the 10-year yield. And it's really dropped. Well, it dropped from 3%. And it's a pretty big drop in the past few weeks. Let's look at it on the daily, but it's historically been rising because the markets are getting nervous, right? And look at this. This is a huge cup and handle on the 10-year yield. Here's the 10-year bonds, right? Not the yield, but the bonds themselves. So bonds themselves, or the interest rate on them, has been bonds have been in a bull market, but the yield has been in a bear market. And this is, and the top was in 1981. And this is gonna, once the bonds start selling off, or yeah, I mean, they're gonna sell off. That's what's crazy about this recession that's coming. Or it's not a recession. It's going to be a hyperinflationary depression, which is like the worst thing that could ever happen. It's like, I'll talk more about that. So once the yields go up and the market forces them up and the Federal Reserve can't do anything about it, and it starts looking like this, like Paul Volcker's raising the interest rates, and and we're going to have a bear market in bonds. I mean, everyone's debt is going to implode. All the corporate buybacks corporations have been doing in the past, like 5 years, their debt's going to implode, like corporate debt. So these monopoly corps are just going to implode. It's going to be spectacular. Like the amount, like, you guys think 2008 was bad? I mean, people didn't really feel it all that much. They did feel it. But it was only the financial sector and insurance companies and the mortgage companies going bust. But, you know, it was crazy. Realtors came back, and all of a sudden the housing bubble was back within like 6 years. This time around, not only is all of that going to implode, like it did last time, but your average day person's going to lose their job. And I'm going to talk more about that as well. All right, so here's another indicator I like to look at because I like cars. But we've been in a car bubble in the past, since the 2009 bottom. Remember cash for clunkers and all that, and right now people are getting ridiculous, like 6-year loans on new cars. If you can't afford a car and you have to get a 6-year loan, something crazy like that, with high interest, don't buy a new car. Buy a used one. Nobody cares what you're driving, right? So, anyways, you can see we had the NASDAQ bubble pop. Car sales started dropping prior to that recession and the 2001 recession, right? And then before the 2008-2009 MBS crisis, car sales really started dropping in 2005 steadily into 2007. Then all of a sudden it just fell off a cliff and GM went bankrupt. And look at where car sales are at right now. It looks like it's consolidating, right? And it's either going to break out or break down. I have a feeling it's going to break down. I mean, people can't take on more debt. Like, who's going to... it's been a bull market for the past 10 years. More than 10 years. Well, no, 10 years. Yeah, 10 years. Are there more Americans left who are going to buy new cars, who could afford new cars? I highly doubt it. So the top's in for car sales. Not just that, Ford is laying off, massive layoffs. GM is having massive layoffs. And, there's a reason they're doing that. They see what's coming. They have entire departments calculating if people are going to buy more new cars in the next 5 to 10 years. They look at demographics, look at age, they look at people's income, and they see their own sales. And I've talked about this. Drive around. If you live in the U.S., drive around. Go look at those empty mall parking lots. They are jam-packed with new cars from dealerships down the street that already have their lots completely filled. All right, the car bubble's popping. So is home builders are getting wrecked as well. I mean, there's just too many red flags. Just too many. So let's take a look. The Dow Jones looks just like the S&P. The dollar, for a second. I don't know which way the dollar is going to go. It's either going to have a knee-jerk reaction if the stock market crashes and it shoots way up. And there's a giant, like on the monthly, which is weird. Well, let's go to the weekly first. Here's the weekly. There's a giant cup and handle on the dollar, on the weekly and the monthly, right? So, according to TA, right, just this pattern, the dollar is supposed to go into a bull market for like the next few years. Now, is that really going to happen? No, it shouldn't, because if the Fed has to capitulate, they stop raising interest rates and they start lowering them again and ramp up QE4 and start money printing to save the stock market, the dollar is going to fall. It's going to crash. So patterns are patterns, but the fundamentals in the end and what the Fed does trumps these big patterns. Gold. Where is gold? Here it is. Cup and handle on gold. And if the Fed capitulates and this is their last rate hike in December and no more rate hikes, and then eventually they will start doing QE once the stock market falls like 20% or something, gold's going to just go to the moon. It's going to make... Right now it's around $1,200. It's going to make new all-time highs in the next few years, which would be higher than $2,000, in my opinion. And the stocks, gold and silver stocks, they're like destroyed. They're down like over 90%. They're going to go up like hundreds of percent, if not thousands. So what else do I have? The trade deficit. Let's talk about trade. So the trade deficit is getting worse, as you can see right here, right? This was the trade deficit in right at the bottom of the Great Recession in 2008, 2009. And look at this. We had a nice trade deficit rally. Of course, below this line means negative, means we're losing money. The United States, if it was a company, it's losing money year over year because it's not selling more than it's buying. That's what the trade deficit is. And it's going greater into debt every year that the trade is below this line. The trade deficit, the first time it went negative, well, was weird, 1940s. And then in the 1970s, this is when it began. It's hilarious. 1971 is when the trade deficit started going into the negative. What happened in 1971? Nixon took the dollar off of the gold standard. See how that works? And that's when the country started going bankrupt. That's when its revenues, that's when its cost and profit margins and its revenues went negative. So, I mean, revenue's high, but profit is negative. It's just like, the United States is just like Amazon. It looks great on the stock market, and it looks great on paper until you actually look at its profits. Amazon hasn't made profits, ever. And the U.S. hasn't really made a profit since 1971, economically speaking. So that's what happens when you go off a stable currency and a peg. So yeah, there you go. This is all the proof I really need, guys. This is all I need. Now I get it. Trump is trying to save. He's got a tariff war on trade. He's trying to get China to capitulate and make better trade deals. I mean, the matter of the fact is, and Peter Schiff said it really well. I don't care what you think about him because he doesn't like cryptos. He's still a smart guy. Okay? And the hell? Peter Schiff, I mean, he just owned Trump. The tariffs aren't the products. Products don't pay taxes. The taxes on American consumers who buy the products subject to the tariffs. If they choose to avoid paying the tariffs, they either buy more expensive alternatives or go without the products. Get it, tariff man. What Schiff is saying is that U.S. consumers pay for the tariffs. Because what companies do is they pass on the costs to the cost of the product. So if it's more expensive to buy Chinese crap, then Walmart prices are going to go higher because it costs Walmart more to buy it from China. And then the U.S. consumer is going to pay for the tariff. That's why nobody wins a tariff war. Trump is probably hoping he could get China to, I don't know, somehow make better deals where they don't gut the U.S. through trade. But the problem is, the reason China can gut the U.S. and its industrial part of the sector of the economy, which is like 11%, probably even less once this bubble pops, is the fact that there's too many regulations, too many taxes on companies in the United States. Listen, guys, the United States is not competitive on a global scale, not anymore. It's because of all of the unions. It's because of all the regulations and all of the taxes. Why would you want to be an entrepreneur in the United States when they literally steal more than 60% of your money? And the red tape and the regulations are so high, the likelihood of you even having a successful business is extremely low. So the only companies that survive in the United States are monopoly corporations like Amazon and whatnot. And the only reason they survive is because the Federal Reserve prints cheap money, and it goes all into the stock market and all into the banks and the coffers of these monopoly corporations. So it's a giant Ponzi scheme. Let me explain this to you guys. Over 30% of the U.S. economy, well, I forgot the exact, but it's something really high. It's like over 15, over 20% is financials. And then another like 30% is the federal government. And the industrial sector is like less than 11%. You guys have to understand that service sector jobs in the finance world is a byproduct of industrial growth, of real companies creating real things and shit. But now we have a financialization of the U.S. economy. And the financialization sector is larger than the actual products and the things really being built and done in the real economy. And what that does is it creates a huge bubble in the stock market, and it causes malinvestment, and it causes FANG stocks to be worth like 100 times more than they really are and what they're really doing in the real economy. And once the Fed can't print any more money, and once the dollar loses its value, these corporations and banks and everything that's propped up by the money printing, by the misallocation of assets, it's going to come down with so much vengeance. It's going to be amazing. And that doesn't... I wouldn't care so much. I wouldn't be afraid if banks all start going under and monopoly corporations start going under. That's fine, because what happens is the free market... Well, that's the problem. There is no free market in the United States. But if there were, the free market would fix it with small companies and mom and pop companies popping up everywhere after the monopoly corporations all fall apart and the banks fall apart. Would have thousands of banks and thousands of small corporate companies. The problem is the regulations and the taxes won't allow your average person to build a business successfully. In the competition and the red tape. So what's going to happen is, I mean, shit's going to hit the fan, and then Americans are going to want communism. Let me show you. So the midterm elections, you know what, it's going to take too long. I will post this, or I'll show you in the next video. But if you look at the midterm elections, the chart looks mostly red. Well, the map of the United States. But if you actually skewed the chart to represent the population density, there's way more blue than red. So there's more people who want like Bernie Sanders and like free shit. And listen, the United States is bankrupt right now. And if we get a president who's going to give you free shit, the United States will end up like Venezuela. I swear to God, you will be eating animals from the freaking zoo. If you're lucky. You'll be eating your own cats and dogs. I'm telling you it's coming. And that's what it's looking like. And I'm telling you it's going to happen because Trump's failing. Nobody wants to hear it, but Trump has failed. He's failed on NAFTA. He didn't really change NAFTA. He didn't really change Obamacare because of Paul Ryan or whatever, the main representative, House of Representatives. And this trade deal that he's making with China is bullshit. There's nothing changing. And the trade deficit is getting worse. And Trump's going to take credit for the economy imploding because he took credit for it in the last 2 years for having such a massive bull run, which was false optimism on the fact that Trump is going to lower taxes and bring back lower regulations and all of that, right? But he didn't. But it's just too late. It's a little too late, and he didn't do all that much. He did help, but he didn't do too much. He helped corporations, but he didn't really lower taxes for the middle class. And for, well, the poor don't pay taxes. Guys, like literally 30% of the U.S. population pay taxes. The rest don't. The very super rich, Warren Buffett, does not pay taxes. Corporations, they don't pay as much taxes as the middle class. And the poor class is way larger than the middle class. Like literally over 50% of people in the United States, well, no, it's like 40% don't have jobs. Over 60% get some kind of payment from the federal government. And it's like, it's going to be horrendous. I mean, think about it. Once the economy like crashes, the 40% of people who have full-time jobs is going to be cut by like 60%, meaning there's going to be like 15% of the US population with full-time jobs. What do you think's going to, I mean, it's going to be, that's why I'm scared. I'm not going to lie, I'm scared. I'm not trying to fearmonger, but I'm scared. I'm personally scared. So, I mean, I don't know what else to say, guys. I would go through the comment section, but I kind of have to go. And, I just wanted to touch base on this. I talked about GE in my last video. So, guys, go to my YouTube, and if you missed the other video, go into the playlist, go to specials, and click on the stock market. It has 1,300 views. That's a really good video. I am going to make more videos on the stock market and everything, maybe a mini documentary or something, before shit really hits the fan. Yeah, guys, the middle class are the biggest suckers out of the entire classes, wealth classes. You want to know why? The middle class pays the most taxes, percentage-wise, and they're the ones who are getting raped by the poor and the underclass who make less than, like, I don't know, $25,000, $30,000 a year. And then the super rich. And the government. The government's raping everyone because the hidden taxation is inflation that nobody sees. But it slowly creeps and creeps. And once inflation is noticed, I'm really hoping that the left and the right, politically, come together for once. Because if they do that, there's actual hope for a prosperous future for the United States. Maybe. Maybe. I don't know. Either way, I'm probably gonna dip out. I'm gonna get out of here before it all comes down. Go to playlists on my YouTube. Go to specials on the Wolfpack Cryptos, and go to stock market. Will it crash? When and why? Trading and economy. It'll be on the right here.
You should take online.
It has
Eat, sleep, and trade.
This. Oh my god, this guy. What a scam. It has 1,357 views. And then also go to MMGinvest. Eventually, I'm gonna stop uploading these economic videos on my Wolfpack Cryptos YouTube because I need more of you guys to go to this YouTube channel, and I need to grow this as well. Just in case if one channel gets taken down, I'll have the other. You know, I'm really planning ahead here. And this is geared towards gold, silver, and economics. And I have wow, finally a breakthrough. I have 100 subscribers on MMGinvest. Let's make it 200, guys. Let's do it. All right. So if you guys like this video, smash that like, share the video on Twitter, Telegram, Facebook. I don't care, wherever. And I really wish I could get to your questions. I don't really see too many questions, to be honest. And for the trolls out there, and for the scammers, guys, do not, I will not message you on Telegram or YouTube in the comments section to email me. This is not my email. Do not, if anyone gives you a Wolfpack Cryptos, listen, they look just like me. They stole my logo. Guys, that's not me. The only way I contact you and you contact me, well, you can message me in the Telegram groups, but you better make sure it's me. I will ban them if I see someone trying to be me. But yeah, the only way you can contact me and you know if it's me, if you go to my website, wolfpackcryptos.io. So Wolfpack Cryptos, plural, IO, and there's a support section. Alright? And that's the safe way to email us, and we email back and forth. But anyone who contacts you and gives you my email, that's not me. It's a scammer. And if anyone asks for anything, money or anything, it's a scammer. Alright guys, I just want to make sure. And I'm going to take care of these scammers. There's ways. I'll find out who they are, and I'll send them a virus. I have you know, computer guys in the admin with me. There's IT guys, like forensics guys, and we'll take care of them scammers. All right, guys, thumbs up. Leave your comments in the comment section of this video because I have to go right now, and I'll respond to your comments, and I'll delete the trolls. All right, guys, until next time.